Welcome to Retirement Decoded with your host, Scott Tucker, where we break down the complexities of retirement planning to give you clear, actionable advice. Whether you're just starting out or getting ready to retire, Scott's here to help you make informed decisions and secure your financial future. Tune in each week as we simplify the process and decode the path to a stress-free retirement. Now, here's your host, Scott Tucker.
And we're back. Welcome back to the Retirement Decoded podcast with Scott Tucker. I'm your host, Scott Tucker. And Associate Advisor Andre Hootie joins us today. Say hello, Andre Hootie.
Hello, Andre Hootie.
Mr. Hoodles, we have a question from Mark. Mark rates the podcast. Mark says, Andre, everyone asks says, I can't read. Andre, everyone says, just write out the market, but I'm already retired and can't afford big losses. What are some practical ways to help keep my income steady without sitting all in cash? ?
Well, I'll say the first thing I love is that you're not thinking about going all into cash for safety, because that's the wrong answer, and we hear that all the time. And I'm really happy you're aware of that you can't take big losses, because we also see that all the time.
Andre, did you see the email we got the other day? We emailed our list we have a whole 20,000 people that subscribe to our weekly email. Mm-hmm. And by the way, if you want to get on our phone calendar, you can do that at tuckerretirement.com. At tuckerretirement.com, you see our phone calendar. Click and pick a time that works for you, and we'll talk to you 15 minutes for free on the telephone, get your questions answered.
And your answers questioned.
So we got the email back the other day. We sent out an email about an estate planning and taxes, or legacy planning and taxes workshop we're doing. And we sent it out to our list of 20,000 people. And then one person, you always get some weird replies. It's like, click here to get registered, and that one's going to be in Des Plaines, Illinois, and we move them around. But sometimes people click and register. Sometimes they reply with something totally unexpected. And one gentleman replied back, and he goes, "But I don't have enough money to buy gold." And he was serious. He's like, "I don't have enough money to buy gold, and I'm already retired." And I didn't say anything. We didn't say anything in the email about gold, about already being retired, nothing. It's just say, hey, if you want to learn about estate planning or legacy planning and taxes, wills and trusts, this and that, South Dakota, what am I thinking? The South Dakota Dynasty Trust. We just mentioned several things you might want to learn about, other things to do with retirement, investments, taxes, healthcare, income planning, and that.
But nothing about gold.
Not a darn thing about gold. He says, but I don't have enough money to buy gold. Plus, I'm already retired. And I was like, are you replying to the right email?
Yeah, well, I think I'll add a little bit to that, because especially when gold goes up and the price moves up, everybody thinks that their genius is to go and buy gold. And
yeah,
there's a lot of questions there, like, where are you going to store it? How much does storage cost? There are alternatives to physical gold. If you're really gung-ho on that, let's talk about that. Because physical gold is just, it brings a lot more issues than solutions.
I just thought of that when we started talking about going all in cash. You remember when, maybe it was a scarcity issue, but sometimes things are high priced. Do you remember when toilet paper was scarce and everybody was buying it during COVID? Oh my God, I got to buy more toilet paper.
I know.
Nothing about COVID. COVID doesn't cause a decrease in toilet paper production.
Yeah, it's everybody bought.
It's like the least affected thing. It's kind of like when we're in Chicago, we are federally licensed, so we can help U.S. citizens and green card holders and anywhere in the U.S. in its territories. Sort of like we're in Chicago, though. And so when it's about to snow, everybody leaves work early or whatever. I mean, some do, some don't, I guess. But everybody, whatever they're done with work, whatever their deal is, or even if it's the weekend, everybody rushes to the grocery store.
Yep.
It's like I got to get groceries.
Like, you can't get out of your house if it's just snowing.
Well, everybody here drives in the snow anyway.
Yeah.
Even if it's plowed, not plowed, they drive. There was a Super Bowl a couple years ago, and it was like 24 inches of snow.
Yeah.
And people drove in it.
I was working that night. And then I had to drive home.
And but then people act like, well, I got to go to the grocery store.
Yeah.
You know what? You can actually get groceries delivered during a blizzard.
Yeah, that's true. Chicago. Well, they might charge you a surcharge. Who knows? I've never tried, but I imagine.
I doubt it.
Yeah, well,
Well, they do get a limitation on how many orders they can receive. But it's funny, everybody rushes to the grocery store, and then like the bread and the milk, they got to get the bread and milk.
Yeah,
and so the bread and the milk get like halfway sold out. Like the longtime listeners of podcasts will know that Andre Hudi was born in Ukraine, so but you were post-Soviet times. It looked like a Soviet grocery store though, where they have all the bare shelves.
Yep.
Like, oh, here you have so many. What were they? It was it rubles when it's Soviet times? It was rubles. So you have all these rubles, comrade, and you have guaranteed employment, and you have affordable housing. But I go to the grocery store with my rubles, and I can afford to buy the things that aren't there.
Yeah.
Yeah, but the cost of bread's really low. But I can't buy it.
Right.
It's not in stock. Anyway, Mark was trying to ask us, Andre, everyone says just write out the market, but I'm already retired and I can't afford big losses. What are some practical ways to keep my income steady without sitting all in cash? Boy, I tell you, this sounds like I don't want to be the guy, because it's not always the case. This could be tricky. You got to deal with somebody you can trust on this. Sometimes an annuity can help with this, because if you've kind of gone too long to where you're already retired and you want to keep your income steady without sitting all in cash. I'm trying to think how not to say that, because I'm thinking I don't want to be the one size fits all guy. But how about, Andre? There are low volatility stock portfolios or stock and bond portfolios.
Yeah.
So if you don't want to do an annuity, that's another way. I'm just trying to think about how to not take too much risk for you.
Yeah, I mean, I think that at the end of the day, it really just depends on the type of risk you want to take. If you're comfortable with market risk, then, maybe with a little bit of market risk, then maybe a low volatility portfolio is what suits you. If you want, no market risk, then like you said, maybe it is an annuity.
So what I do a lot of times when I don't know what to do, I do half of one and half of the other.
Yeah, that too.
So that might be an angle for you there, Mark. It might be, so everyone says just write out the market. Yeah, they say write out the market. And recently people have been telling me things that don't make any sense. The people say, well, the market can't fall 20%.
No, it can fall a lot more.
It can fall 50%.
It can fall 100%.
I mean, do we have no memory, right? It was only like 2008. It was over 50%. So Andre, everyone says just write out the market. Again, Mark, when you're retired, that's different. When you're 25, yeah, just write out the market. When you're 65, 75, can't do that anymore. And then Mark says, but I'm already retired and I can't afford big losses. That's kind of what I was thinking. When you go to start withdrawing, you don't want to have to withdraw from your portfolio when the market's down, because you're being forced to sell into losses, and you're kind of consuming your seed corn. I grew up in Michigan, a sort of rural area. So you're consuming your seed corn. So how are you going to plant your crop in the spring to grow back more corn? If you're selling at a loss. I don't know if that makes sense to anybody who didn't grow up in Michigan. What are some practical ways to keep my income steady without sitting all in cash? So there's those two ways you talked about, Andre. So there is a type of annuity where you don't have losses when the market declines, and it can provide you with an income rider. I'm not a huge fan of paying for an income rider, and it's hard to find a free income rider, so we'd have to talk about that. So not specific advice. And then if we do a low volatility portfolio along with that, the low volatility portfolio might include dividend paying value stocks. So we stay away from the growth stocks that crash all the darn time.
Yep.
So dividend paying value stocks, and then also complement that part of things with that risk side of things. So the fixed index annuity might be the way to go on the safe side, maybe with an income rider, maybe with some inflation protection. And then on the risky side, or the low volatility risk side, dividend paying stocks, because those prices stay kind of stable and the dividends tend to stay stable, although dividends are never guaranteed. Neither are stock values. And then you have, along with those dividend paying value stocks, and you also have short duration bonds, short duration treasuries.
Yeah.
That combination, it's not one thing though, is it?
No, it's never one thing. There's not really a one size fits all. It's depending on your situation, and then, and even to add a little bit more to that, and I'm getting maybe a little bit too complex here, but on that risk side of things, depending on how you position, that portfolio, options hedging strategies could play a role there too, and, diversify more risk from there. So that now you're getting way more complicated, and that's probably not going to suit most people, but it is another option.
So, Andre, one thing that Andre used to do when he got out of college, he used to trade options downtown Chicago for TD Ameritrade. And so, Andre, you could handle, all the put options and stuff. But do you think that we ought to get a gentleman who's retired onto his computer and have him write and put options and things?
If you want
how about
that.
collars and iron condors?
Yeah, I would not suggest trying that yourself. If you do want to incorporate something like that, give us a call and we can talk with you and figure out if that even fits into your
Andre,
portfolio.
do not give us a call. Go to tuckerretirement.com, get on our phone calendar.
Oh, well, that's easier.
Because, Andre, like I always say, unscheduled phone calls are...
Unscheduled?
Yeah. Because we're in, right now we're in the podcast studio.
That's true. I mean, yeah. And if you just randomly call, you're not going to get one of us. You're
gonna get Julie, and then she's gonna say, "Oh, well, hold on a minute. I think he's in a meeting," and all this kind of stuff.
Yeah.
So yeah,
and then she'll get the calendar.
Yeah. So So if you don't want to go to tuckerretirement.com, you could stalk Julie on the phone, and she could put you on tuckerretirement.com. But yeah. So we had a gentleman the other day, Andre, that said, he said he went and because it took him like 2 months to become a client, which is a pretty long time for us.
Mm-hmm.
And because we had a phone call, then you had a phone call with him, then we had a Zoom with him, then we had a Zoom with him and his wife, whatever, however you say that, and then we had another Zoom with them. Her Cobra was ending, so we helped get her a health insurance plan that included her hospital. Then we just had a Zoom with them the other day, and then they said, okay, we're going to become clients. And he goes, I did all my research. I go, what do you mean? He goes, I went and met with all your competitors. I interviewed all your competitors. Whatever. I'm like, oh, wow. I'm like, that's cool. He sounded like he'd been through like 10 people.
Yeah. Yeah.
Like he
had been through the ringer.
Yeah. He's a real thorough guy. He's got an MBA in finance and all this stuff. He goes, I went and talked to all your competitors, interviewed them, did whatever, did Zooms, saw them in person, did all this, did that. He like responded to everybody's marketing for a couple of months. And he goes, and I figured out you guys are, I think the best choice for us. And he goes, now something I didn't like about everybody else I talked to, which I thought this was strange. I still think this is strange. I just can't imagine it. He goes, everybody else I talked to said I either needed to buy an annuity or buy life insurance. And he and his wife, they're investable assets. Not everybody who comes to us has $1 billion, but it's been pretty frequent that people are coming to us. Well, geez, it's even moving up over time a little bit, isn't it? Most people coming to us are between $1 and $6 million. Yeah, which is kind of weird because it wasn't always that way. But it's maybe we're getting better.
Well, we have a pretty darn good process. I
think so.
So it's
but also people are some people are starting to inherit money. Also, and that's not where it all comes from. But some people are inheriting money, and also the market is high, and so that plays into it too. Mm-hmm. But and maybe it's just that maybe people have gotten more serious about their savings, but also market returns feed into that. I don't know.
Well, I think when the Trump tax cuts were supposed to sunset at the end of 2025, a lot of people really thought about that and realized that, hey, it's a good chance the taxes are going to go higher. We got lucky and they got extended for a little bit, but that could always change. And so I think for most people that have saved tax deferred, they're just starting to realize that this is time's a ticking. And it's only a matter of time before the taxes go higher.
Well, what I was thinking about this gentleman and his wife, their investable assets are $3.8 million, and 3 paid off houses. And one house they rent for $5,600 a month. Mm-hmm. So for him to go on his wife's behalf in the early stages, for him to go to 9 or 10 other advisors or whatever in Chicagoland, financial planners, whatever in Chicagoland. And everywhere he went, they told him, so they kept telling him, well, you can put your money in an annuity and you can have a guaranteed income stream with some inflation protection. And that's what you ought to do. And that's like the first thing they're saying. I can't believe it.
Yeah.
I believe him, but I can't believe it.
Right. It's just,
and I said, well, we said, what would we call him? I'll just call him Bob. Say, well, Bob, and he has some tax. They have some tax issues because most of their money, like 86% of their money, is tax deferred, not tax free. I said, "Well, Bob, an annuity is not going to solve any of your tax issues for one thing, and that's one of the major issues you have." And then some annuities won't fix your risk issue because they've got almost all their money in them. I think they have all their money in the market, 100%.
Yeah, they do.
Yeah. So you've got risk issues, and many annuities won't fix that. And then no annuity will fix your tax planning for retirement issue. And then after all that, he goes, well, and what about some of them? A couple of guys told me about index universal life, and I should get index universal life. And I think that sounds like somebody who's not securities licensed. Mm-hmm. I'm not mad that a financial planner might use some kind of insurance vehicle in your overall financial plan. But the first thing that comes out of their mouth should not be, you need index universal life insurance, or you need there's a company that works a referral network. They get your name from one of your friends. They come see you and get 3 names from you, go see 3 of your friends, and then their thing is always, well, Andre, you need whole life insurance. And so whenever somebody starts out with, here's what you need, it's like if your doctor said, you look like you need Crestor. You're like, well, you think we should run my blood? No. Crestor.
You just look like it.
You look like it.
Do it.
Wait, Andre, what if they look at you and they say, you look like you need Viagra?
What does that say about me?
That's about how stupid that is, though, isn't it?
Yeah,
it's like I didn't even tell you how that's going. We haven't asked you any questions. We didn't draw any blood. We're going to give you Crestor, Viagra, and foot powder.
Yeah.
Foot powder. My feet are fine.
Yeah, well, it works for everybody else.
It works for everybody else. So if you ever talk to somebody, you podcast listener, if you ever talk to somebody and they tell you, or you see this on TV, you heard it on the radio, hey Andre, you need gold in your IRA.
Yeah.
Well, how the heck do you know?
Yeah, seriously.
And what am I going to do with it? Get gold in my IRA, then what?
I know. And
what's funny is gold's high right now, and people love to buy high and sell low.
Yeah.
We were talking about that. Is it this episode or another episode? People love things that are already sky high. Mm-hmm. If Nvidia's high, they want to buy it at the top. If gold is high, they want to buy it at the top. Whenever something falls in value, they want to sell at the bottom.
Yeah.
It's kind of human nature, but it's a thing that when you manage your own money, you can screw that up.
Well, it's emotional trading, and it like you said, when you're managing your own money, it's really hard to not let that be the driving factor of your decisions.
And a lot of times you can be messing with something you don't fully understand. So, Andre, how many times people tell us that bonds are safe?
Oh, about every day.
Yeah, just about every day people tell us the bonds are safe, And if you remember back 2022, so that's when I say that, I always think of 2002. I'm like, wait a minute, no, it was like 3 years ago. So 2022, the U.S. stock market fell 19%, and at the same time, the bond market fell 10% in value. So both stocks and bonds fell together.
Yeah.
So if bonds are safe, why did they fall 10% in 2022? Which was pretty recent, and people don't remember it.
I know, and it's well, and it's going to happen again when interest rates go up. We're going to see the same thing happen, and we don't know when that's going to be. Mm-hmm. And it's just, are you willing to put all your eggs in one basket and take that chance? So,
Andre, that's something a lot of people don't know or don't understand, and it's nobody's fault, because we do this all the time, and they don't do it all the time. We do this every day. It's what we do. So, as interest rates rise, the market value of your bonds will fall. And nobody really tells you that. Yeah. Think about all the things. It's funny, other things. And I know high school's not, upper education or whatever, but there's so many things they're supposed to teach you in high school or, middle school, high school. Like by the time you're done, you're supposed to know a lot of stuff. Yeah. It seems like there's so much stuff that people just never are taught.
Well, especially when it comes to money, anything related to money, they just don't teach you anymore.
Yeah. Even I grew up in DeWitt, Michigan, home of the DeWittians. And in 7th grade, Mr. Smith had us do 1040 EZs. Oh. He had us do tax returns. Like, here's a hypothetical thing. And we'd fill out the tax forms, which is really, it wasn't training us in personal finance. It was training us to be obedient taxpayers.
Yeah.
It was training us to be wage slaves.
Well, to some extent, yeah.
But at least it's teaching something, like some form of adulting, as the kids say. Yeah. We used to have a thing, too, even like in 6th grade. We used to have a thing where we were learning sewing and cooking.
I had that, too. But
in
I had
6th grade. Ukrainian school or?
No, not Ukrainian school. I got... Ukrainian school was very different. It was in 7th grade though, English school. We did like a sewing cooking class. It's like just a
Oh, you mean like American school? You mean?
Yeah.
So, longtime listeners, Andrei Hudi was born in post-Soviet Ukraine when he was 3. And I'm sorry, you were born when you were 0. Yeah. You came to the United States when you were 3. And then when you came to the U.S., something the Soviets used to do, which may be carried over in Ukraine or not, I'm not sure. The Soviets used to send the kids to school Monday through Saturday, and their only day off was Sunday. Yeah, and then, so when you came to the U.S., you did American school 5 days a week, and then you went to school on Saturday to learn your Ukrainian culture stuff.
Yep, Ukrainian culture, history, language, reading, writing. I'm thankful for it now. I wasn't so happy back then.
All your Saturdays.
I missed all the Saturday cartoons.
All my Saturdays ruined. You missed all the cartoons on Saturday. Then so Sunday morning you turn on the TV and it's all the church stuff.
Yeah, exactly. So it was,
or no, you go to school or you go to church with your grandpa. Your grandpa is Ukrainian and there's a Ukrainian church near the office, and you say he gets there an hour early, and then it's like a 3-hour service.
Yep. Yeah.
So 4 hours. I mean, it's cool to be with your grandpa for 4 hours, but the 3-hour service is probably a little bit longer than you thought.
Oh, so long. And that's the weekly one. Easter's even longer.
Oh goodness.
It's like a 5.5, 6 hour.
Oh
mass.
Boy.
And it starts at midnight, goes to like 5 a.m. It's
oh yeah, that's right. You told me about that.
Not a fan.
That's
Not a fan.
That's a long one.
Yeah.
Overnight. Oh goodness. Anywho, so Mark, everyone says just write out the market. You're already retired, can't afford big losses. I hear you there. And then some practical ways to keep your income steady without sitting all in cash. I guess we've given you some. I just want to be careful that you don't take our advice and run off with it and then run into the wrong person. So variable annuities, not a fit in our humble opinion because of the market risk in those. We didn't really talk about that too much. Dividend paying stocks, the dividends are not very guaranteed. The stock price is not guaranteed. Short duration treasuries and that. If interest rates go up, the value of those can fall. So there's a lot to it. Get in our phone calendar, Mark or any other Marks or anybody. I used to know a person named Mark. Anybody within the sound of my voice, go to tuckerretirement.com. Any podcast listener, friend of a podcast listener, go to tuckerretirement.com, click and pick a time on our phone calendar for free. We'll spend 15 minutes for free with you over the telephone in the coming week. Andre will get their questions answered.
And their answers questioned.
At tuckerretirement.com. Thanks for listening. We'll talk to you on the next podcast.
Scott Tucker Solutions, Inc. has a strategic partnership with tax professionals and attorneys who can provide tax and or legal advice. Neither the firm nor its agents or representatives may give tax or legal advice. Individuals should consult with a qualified professional for guidance before making any purchasing decisions. A Roth conversion is a taxable event and may have several tax-related consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. The views and opinions herein are those of Scott Tucker Solutions, Inc., and do not necessarily reflect the views and opinions of AE Wealth Management, LLC. Investment advisory services made available through AE Wealth Management, LLC, AEWM, and Scott Tucker Solutions, Inc. are not affiliated companies. Insurance products are offered through the insurance business, Scott Tucker Solutions, Inc. Scott Tucker Solutions, Inc. is an investment advisory practice that offers products and services through AE Wealth Management, LLC, a registered investment advisor. AEWM does not offer insurance products. The insurance products offered by Scott Tucker Solutions, Inc. are not subject to investment advisor requirements. AEWM and Scott Tucker Solutions, Inc. are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Scott Tucker Solutions, Inc. is not permitted to offer, and no statement made during this podcast shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Scott Tucker Solutions, Inc.